buying a house feels like getting slapped in the face multiple times. Prices are too high, interest rates are too high, the down payment is like a big gut punch, and on top of everything, there's all these closing costs you have to worry about. So I don't blame you guys for looking for ways to reduce those costs. And one way that's a very popular way of reducing those costs is getting the seller to pay a lot of your closing costs. But how does that actually work? Well, let's break down the common scenario that I see. So let's just say you're a first-time home buyer, I'm your agent. There's a house for $500,000, and we want to get the seller to pay the closing costs. How do we do that? I'm going to break down how I explain to my clients how to look at it and maybe come to a solution together. For those that don't know me, my name is Javi. I make videos just like this to help educate you on the home buying process so you don't get taken advantage of when you're looking to buy. And when you're ready to look to buy, consider using me if you're in the Phoenix, Arizona area, or one of my trusted agent referrals down below. I also have a bunch of great like free resources for you to check out on my link in the description. So go ahead and check that out, or just do whatever you want. You know, it's a free country. So let's get to it. So let's just kind of break down the scenario again. For those that don't know, I'm going to just try not to edit too much today's video. Like I noticed that like a lot of videos have a bunch of editing and cuts and whatnot. So you're going to see a lot of mistakes. You're going to see a lot of errors. It's just pure unfiltered hobby. So let's say we have a house for $500,000. Okay. Anytime you start talking like deeper level stuff, like offer making, closing costs, all that stuff, I think there's two numbers we should have in mind first. First number we should have in mind is what we think it's worth. So what is the value, at least our value that we think it's worth? And the second one is what's the estimated cost that we have? Now you may already have an idea of the estimated cost when you talk to your lender, but the value is something you're going to determine as soon as you know that you like a house. So this could be either before you go look at houses, or maybe as soon as you're done with your showing, you tell our agent, hey sis, hey bro, I need you to figure out, look up some comps for me. Let me know what I think of your value, what you think of the value. So let's do like a sample of something like I think over the weekend. So let's say I'm looking up the value, right? Ooh, I didn't know I could do that. That's cool. And there's this house that we're looking, and it's for $500K. It's in like okay condition, has a pool. Okay, we find one that's similar to that one that sold recently for $480, but had no pool. There's another one that is currently for sale for, I don't know, $490, but it's in bad condition and it has a pool. Cool. So off the bat, we can kind of already assess, well, if it hasn't sold for $490 and it's a bad pool, and let's just assume here the days on market, how long it's been on the market, is for like over 100 days. So we know for a fact that $490 is too high for this specific house. So this definitely needs to go lower. This house sold for $480. Okay. And it didn't have a pool. So we know for sure $480 is probably going to be the bottom, because the fact that we have a pool is probably a good indication that it's going to be worth higher than this one, right? So if this one hasn't sold for $490 and this one's been on the market, let's say 30 days, so we don't really have a good idea of what's going on, what do we think the house value is truly? Well, if it hasn't sold for 30 days and it's for $500, I think definitely that's a little bit overpriced. So this definitely needs to go down in price. But how low does it need to go? Does it need to match that $480? Does it need to match that $500? It's up to you to find out. And this is just like literally a random example I found. So in this case, in my opinion, I think this one might be worth closer to like, I don't know, $485K. That might sound like it's offensive to a lot of people, but already just using the example, it's probably telling me that a pool isn't as valued in this neighborhood as in other neighborhoods. And it's probably telling me that that area itself isn't really performing well. So it's like, you don't want to be overpaying for a house in this area when clearly this one should have sold right away, but it didn't, right? So I would say, hey, let's maybe offer $485. So number one, we have determined the value that we think it's worth is $485. This is my perspective. You might be like, hell no, brother, it's worth $450. A lot of people are like that. It's up to you to figure out what it is. The next one is the estimated cost. This one, you want to have your lender, break down like a sample sheet of all the closing costs. And this closing costs will include your down payment, which hopefully you have an idea of what that percentage looks like. But then it includes all this other fees like settlement statement of like closing costs, loan fees, title fees, etc., etc. A good like rule of thumb is it's usually between 2 to 3%. Now, I was gonna say, like, if you're interested in learning more about closing costs, I actually made this video once a long time ago, 2 years ago. Had a sweet beard. Look at that sweet beard. Man, should I grow the beard again? What do you guys think? Anyways, in this video, I have 2 examples of me breaking down a settlement statement from like line item by line item. Also, fun story. I actually had a coffee fall on me in this video. Watch this.
Yeah, I'm trying to save some money.
What a loser. Sorry. Anyways, so in this video, I break down like an exact like breakdown of what the fees are, to kind of help you understand what closing costs are associated with it. But anyways, 2 to 3% is the average rule of thumb, give or take. So now that we have that out of the way, we have an idea what our estimated costs are. Please note, common rule here, the down payment cannot be paid by the seller. Down payment has to be paid by you, has to be gifted by a friend or family member, or given by some kind of government program or assistance program that's helping you. It cannot be given by the closing costs. So the only true thing that we can focus on for the seller is going to be this 2 to 3%. So now we have some clear numbers here. We have this beautiful house, terrible door, that's currently listed for $500,000, but we have done our research and we think the true value of that house is closer to $485,000. Where do we take it from here? Okay, so you have 2 alternate like realities here that you break into. Alternate reality 1 is you that gets the closing costs paid by the seller. The second alternate reality is you still happy, but you pay your own closing costs. Now, 10 out of 10, you're probably going to think, well, brother, give me this scenario every single time. But let's really break down how that works. If you are making an offer, let's say for $485,000 for this property, the way it works is you don't ask the seller to pay closing costs. You don't say, hey, give me closing cost money, please. No. On the contract, here in Arizona at least, there's going to be a line that says seller's concessions. To concede is to accept defeat in something, right? So in that, you can put a percentage or you can put an amount. So in our seller's concessions number, we can specifically put, hey, seller, we want $10,000 in seller's concessions. Now, yes, you're still paying $485,000. So if you look up the tax records or like a history of any purchase that's ever happened ever thousands of years from now, on the history books, your great-great-great-grandparents will say, oh, my grandpapa, my great-great-great-great-grandpapa or grandmama bought this house for $485,000. There's going to be no mention of this $10,000 anywhere. So please note that. But technically, from their proceeds, the seller is giving you, on paper, $10,000 that you can use to pay any closing costs that you have. So really, what is the seller making here? The top net number is actually $475,000. Even though on paper, it says they're getting $485,000, but there's this like, not necessarily under secret agreement, but there's like this like $10K. They're like, hey, buddy, we're giving you $10,000. Thank you, right? So you're really offering that seller $475,000. So let's break down both of those alternative universes. I've been watching my kids, the Marvel movies. My family and I, during the break, we actually watched the entire catalog, all the Marvel movies. And it was so crazy seeing, because I remember, like, I don't know, this may make me old for a lot of you guys, but I watched the Iron Man movies like in high school. Like in Iron Man 1, that was like, might have been middle school, early high school, and it came out, I was like blown away. I'm like, holy crap, this is amazing. So it was just crazy that like my freaking kids now, like I'm watching the same movies I watched as a kid, and I was like, the hell, man, I'm old. I'm just old. So let's break down the alternate universes here. So alternate universe number one, let's call this the seller pay closing costs dimension. Okay, so here's how it looks like. Where you have to ask yourself, do you, if you want 485, should we not offer 495 and have them pay a $10,000 concessions? Before you say, well, Javier, that's not like fair. Like, I want it for 485. I get that. But if you offering 495 minus 10,000 in concessions, that's a top net number of 485. Technically, that's it. Because if you really think about it, this is going to be a little bit too direct. I might lose some of you saying this, but I'd rather be honest with you. Those closing costs, in theory, should be paid by the buyer, because these are fees that you're originating with your purchase. Your lender's charging you these fees, the first year of home insurance, your half of the title fees, like all these, like, what is it, homeowners, HOA fees, all these fees are being originated by you, right? So in a way, we're kind of asking for a little bit of a handout. Dude, and don't yell at me. Like, I've done it before. I've bought houses where they pay closing costs. I get it. And in some ways, it's like, yeah, but the market is in favor of buyers right now, so we should expect it. But shouldn't we shouldn't we offer 495 with 10,000 in concessions? Well, that's an option. If you're feeling very cheeky, you could say, well, let's give 485, and then we want them to get, then we'll do the same thing where we ask for 10,000. But in that case, then you are asking for 475, right? So in this scenario where you pay your own closing costs, you're basically, offer A is like, hey, we're going to give him 485, and this offer is, hey, we're going to give them 475, right? It's the same exact numbers. Which is more attractive to you? It's up to you, but you have to really think about it. And a lot of times, this is why your offers don't get accepted, because you're thinking about the top number without the concessions consideration. I've had people who are offering like, hey, let's offer 40,000 below price, and on top of that, have them pay our closing costs. It's like, yeah, why don't we just offer 30,000 off the price and then we ask for closing costs, right? It's just a little different way of getting things done. And this is the difference between buyers that are looking for months versus buyers that take about less than a few weeks to find their right house, is the way we position our mentality regarding these things. So whatever, let's just assume in this case, we're going to offer 485 minus $10,000. And essentially at the end of the day, let's say you're putting, I don't know, these aren't exact percentages. I'm just going to say these numbers to make it super simple. Okay. So let's say your down payment is $30,000 and there's no other fees on top of that. So at the end of the day, in this scenario, you started off with $100,000 in your bank account. And by the time you're done buying this house, you've purchased it for $485,000. And you have $70,000 to your name still. Okay? That's the finality of this scenario. Second scenario, you're approaching the situation and you're saying, hey man, I want to buy this house and I don't want any handouts. I'm asking the seller to not pay any closing costs. Well, in this case, if you're following the same exact scenario, you're going to offer $475 with no concessions. So the difference here is you are going to have to cover those $10,000 of closing costs. So same scenario here. Let's assume you started off with $100,000. Now your down payment is $30,000, but then you also have to get subtracted the $10,000 of seller's closing costs. So basically you've purchased a house for $475, but you have $60,000 to your name. Do you value having more money in your bank account after? Or do you value having a cheaper price range? What can you do with those extra $10,000? That's security, that's cushion, that's a life experience. That's a trip to Tokyo. I'm just kidding. I don't know. It's a millennial button. Trip to Tokyo. So that's like a potential life experience. You can invest that money and do something with it. You can, have that. I always like to say the reason why I save my money is if my mom ever calls me that I have enough money, like if she's in the hospital, something's happening, I have the ability to help her. There was one point in my life where my mom called me and I did not have the ability to help her and I had to tell her no. It was terrible. And I was like, I do not want that to happen again. So yeah, to me, maybe I like to hold on to things a little bit more unhealthily, right? But that's just my perception. So $10,000, what can you do with that money? It's like for a lot of people, that's like security and safety for like 4 months. So I get it that technically option B does appear to be the smarter way of doing things with a lesser loan amount. You protect yourself more, you're building a little bit more equity, et cetera, et cetera. But those $10,000 make a big difference. And having that in your bank account is friendly where, as opposed to like, let's say your mom does call you and she's in the hospital and she needs $10,000. You can, well, hold on, mom, the $10,000 in my house. Let me find a way. Maybe I can shake my house and the money will fall. No, it's in there. You can't take it out. Whereas the other way, the seller helped you, but that money stays in your bank account. So it's there for wherever you need to do it. So there's no clear conclusion or answer on which is the better solution. That is up to you to figure out. As always, I just want to fill you in so that way you can make a more informed decision on what the next step is. So check this out. If you are looking into any home buyer resources, cool. Go to my link below. All my home buying resources are for free. There's a bunch of spreadsheets and videos and stuff like that and PDFs to help you. There's also my agent referral site. So if you want to get an agent referral anywhere in the country, feel free to go check it out. And also if you are in Phoenix, Arizona area and you're like, hey man, I want to work with that guy. That guy seems cool. You can just schedule an appointment with me. I have two ways to contact me. If you're just wanting an assessment, we can do that. If you're ready to interview me, like big boy, big girl style, I'm ready for that either. But either way, thank you guys so much for watching. I appreciate it. Hope you enjoyed. Did you enjoy the unedited stuff or do you prefer it to be a little bit more edited? Be honest with me. Tell me the truth. Cool? All right. Take care.